Boom, we are alive, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bear. What a wonderfully bullish a weekend that was. Huge gains on our Avalanche play. I think I'm actually going to use that today as an extension of the lesson that I think is so important for people. One of the reasons why we constantly go over the Wyckoff method is just because of how extraordinarily powerful it is to understand market sentiment itself. So what we're going to do here, we've got a few things on the agenda, but we're going to start with that. We're going to look at some fundamental data, on-chain analysis, and we're going to close off with some of the fun Arcane Bear family stuff that we normally go over. So what I want to do today is highlight the post that we made in the private group. So this was the Avalanche trade. The day we took it, when we posted it in the Arcane Bear private group. So we're down near around $16. And one of the things that's fun about this is there's a very heavy repeating pattern here. So I want to show you 1 inch. So this is 1 inch today. So 1 inch is not yet broken out. If we go back and we look at the history here, because there's been a few conversations, what I want to do is highlight Avalanche, its explosion. So here is the later stages of Avalanche again too, when it was still down at $27. It is now at $50. This is a very important part. This is what's known as your SOS and LPS phases. This is actually what we are witnessing inside of Bitcoin right now. So here's Avalanche today. Here's our initial trade entry back here in this first blue circle. I doubled down, add a little bit more here. Now, this is not with my long-term investment portfolio. This was just me playing around with a 3x leverage trade the other day. We made over, we did very well with that trade in a very short period of time. How much it made is totally irrelevant, I think, but it was around a 450% gain in less than 10 days. Now, the reason I closed that out is just because it was meant to be a fun trade. Now, this is kind of the difference between trading and investing. Trading is a very short-term mentality, and macro investing always does better. So I suggest that. Now, if you're like me and you like entertainment, I think trading can be a very entertaining way to spend a weekend. So what I want to do actually is share some of the sentiment, go around these storylines. So here's Ethereum. Ethereum is in a beautiful reaccumulation after decline, and we're in the final parts of that LPS stage. So notice when we look at Avalanche, the final part of the LPS stage was very short-lived. Same with Solana. The LPS stage was short-lived to almost non-existent before we had these really big explosions outside of the trading range. Whereas here, both with Ethereum and currently on Bitcoin, what we're witnessing is a much slower movement. And there's a reason for that. These are much bigger assets. And to get the same type of, explosive move coming out of them, it requires a lot more patience. So what we're doing now is continuing the growth of the study here, because I think it's so important to recognize that these are repeating patterns, and they've been repeating for over 100 years of data that we have. So the Wyckoff method is really about understanding these trading ranges in the last part of the trading range here. The reason why I took this extra trade here in Avalanche is just because we saw all the patterns about to repeat themselves, and I knew that this was going to happen eventually. Now, how high it goes, Avalanche could end up at $600 in the continuation of this bull market, approximately 10 times higher than it is today. Avalanche is one of the very few that I've been consistently extraordinarily excited about because it just represents new tech. I'm a big fan of Emin, and those two things together, the technology and the people that are building it, are what's most interesting to me. So when we look at Ethereum, even though Ethereum hasn't not broke out yet, it is going to, and it's going to probably continue to around $6,000, maybe $8,000 to its finality. But the next, let's say 60 to 90 days is effectively bull market explosions. When you see things like Solana jump to new all-time highs, you have to understand that anyone who thinks that this is a dead cat bounce in Bitcoin knows nothing about market sentiments. This was never a dead cat bounce. As soon as we crossed this point of control here, it became, I think, very obvious that the bull market was going to continue. That's why I decided to take this position, and why these other positions have worked out so well. And what's interesting, again, is if you look in other areas of the market, here's 1 inch, for example, we have that uncompleted pattern. So now we're above the point of control on 1 inch. Very nice move so far. We have not had that LPS phase, which would probably bring us up to around $4.30. And we can see a very clear repetitious pattern between the way these areas function. Multiple falling wedges, breakout above the point of control, entry at the point of control, breakout at the LPS and SOS phases into huge explosions, right? Same here, breakout above the point of control, LPS phases, boom, big move. 1 inch has not had that yet. So I'm using this as a visual experiment to prove my point. Or rather not prove my point, but prove the market's point, that these repeating patterns are much deeper than just a single individual. And this is one of the fascinating parts, I think, about this idea, is that when we're looking at composite operator, we're looking at him as a heuristic for everybody interacting with the markets all at once. And that's why manipulation constantly gets called out by people that don't understand how consciousness works. Is although, yes, you can manipulate the emotions of people. We very clearly know that that's a possibility. It's much more difficult to manipulate the fabric of reality, right? So for instance, if an asteroid hit, I don't know why that's my favorite. If an asteroid hit the world, everyone would get very fearful and assets would sell for an extraordinarily irrationally low prices because people would go into panic mode. Fear always elicits irrational responses. Anytime people are fearful, they can be convinced to do things that they would never normally do. It's actually one of the important things to understand about fear, is fear puts you in a position to act irrationally, and so does greed. Now, the irrationality of a fear-based moment is what much harder to actually endure than greed, because generally when you're in a greed-based euphoric irrationality, you're spending money on ridiculous things like Rolexes. Now, I don't have a Rolex, but you can imagine that this thesis falls in the same categories, that irrationality to either side of the spectrum is going to produce these kind of abstract results because of its relationship with human consciousness. So when we're looking at something, this was the early breakout. Yeah, here we go. Here's the prior to the breakout of 1 inch. When we're looking at this repeating pattern, that Avalanche play produced 200% results in less than 17 days. That is phenomenal. And again, when we go back to the private group, and what I think is so important here is that we've been sharing this story from very early on. So again, here was the initial entry made into Avalanche, well, pretty close to it at least, because of this blue circle here, which was again the close above the point of control. I cannot stress enough the excitement of understanding these psychological waves, because even though there was room for potential extra downside here at the bottom of the trading range, I mean, we could have slipped anywhere. Who knows? Like, these markets are so liquid. But this spring here, as soon as we crossed above the point of control and moved up above it here at $14 for Avalanche, this was a huge indicator that you needed to be in the markets if you had not already. Now, even more importantly, I actually suggest, again, that your continuation of any intelligent asset acquisition platform should be like, you should buy the top, as a matter of fact. Now, this is one of the weirdest things to understand, is that technically most people show up at the exact wrong time at the market and they buy the top. The only way to average that out is to buy on the next available moment, and it's usually on a monthly basis, and you just keep accumulating. And over time, had you done that, had you just kept accumulating, you would have averaged a price probably around $20, even if you started at the all-time high, which we are not that far away from. Now, most of the Bear family has actually been in Avalanche closer to $3, so there's tons of room for our long-term portfolio still, but this was the perfect example to express the power of understanding these trading ranges in a short order. A 450% gain on the trade that we took in less than 20 days. That was phenomenal. Okay, so now across the board, you see these reaccumulation patterns. You see the final stages of the LPS and SOS phase taking place in Bitcoin, in Ethereum, in 1 inch, and we have already seen the completion of these in things like Avalanche, Solana, and a few others. So to Cardano, very similar motion here. Now, again, what was interesting is that this is one of the most abstract parts, is that this looked like an upthrust and it looked like it was about to turn into distribution. But as soon as we broke above the point of control again, nothing but upside. And this is so important to understand, is that when you're looking at a trading range, and you're trying to decipher what phase C and phase E are going to do, phase D and phase E are going to do, which are the most important aspects, you really need to be paying closer attention to phase E. In phase C and D, it can go either way, and it's very confusing. It's almost a bad idea to make entries based off phase C and D. It's so much better to wait until you have a confirmation of phase E, which is that clear close above the point of control and a rising supply or volume signature, which is showing the strength, or where the word SOS or sign of strength comes from in this thesis. So when we go across the board, Serum as well, here is the, let's draw the horizontal trading range. Here is your horizontal trading range. Here is your falling wedge into the pattern, your first break, and then now we've moved up significantly into what's not that far away from all-time highs. From the bottom of the range to here is 234% for Serum. So again, this is why the consistent strategy of being an investor is so much more lucrative than trying to day trade. Because a day trade, you're trying to compensate for percentage growth, which is very difficult to accommodate for in such an asymmetric scenario. It's just better to keep accumulating only, especially if you're young. Okay, so from Serum here, we wanted to take a look at Matic as well. Matic, again, this is one of the difficult parts here, is look how deep this spring went. Right? Like you're talking about from the tippy top high to the spring, a retracement of almost 80% into the spring of this reaccumulation after decline scenario. So again, you had to top your trading range here, and I'm just kind of loosely drawing for everyone's benefit of time with your spring here before moving above the box and continuing into now what appears to be its SOS and LPS phases of this trading range. So how do we make sense of all of this? Well, primarily in a bull market, everything goes up, right? Which goes up first? Well, Avalanche at this stage blew the doors off of Bitcoin in this LPS phase, and I suspect that Avalanche will continue to blow the doors off Bitcoin for the continuation of the bull market. Now, I'm a big fan of Avalanche. We'll just be very, very clear about that here. I've been suggesting everyone, well, I can't make any financial advisory specifics here, but I've been buying Avalanche pretty consistently because I think it's a game changer. So anyways, that's besides the point. I just wanted to let you know I still think that. Even though I closed out that trade, I didn't close out my long-term investment thesis. That was just like, again, that was for entertainment for myself. I was like, oh, what can I do in the week? Yay, 450% return. Next, okay. So let's take a look at some on-chain metrics here. I think one of the fun ideas about on-chain metrics, more importantly, technicals are more valid than on-chain metrics. There's a reason for that. Fundamentals on the long term are a really valuable thesis to understand, but you should start to recognize that technicals are ultimately very powerful when you're in the right position to understand them. So here is Glassnode's data on the Bitcoin supply on open markets right now. So we had a huge drop down, which is where the last rise came from. Again, look at the correlation of price to supply. Again, as soon as the supply started to jump up, the price started to decrease. And here we are, a big chunk of supply taken off the market. And now price has actually been gradually increasing, even though supply has stayed relatively consistent. I do suspect we're going to see one more supply shock and another run up here. So to the rest of our favorites for Bitcoin, what we like to do here is look at the stock to flow deflection model and recognize that Bitcoin is still undervalued, like significantly undervalued. When we look at the stock to flow relationship to just as a kind of a base function, although I think I appreciate the deflection model a little bit more because it is more relative to pricing over product, we can see that we're clearly on our way to 100 grand. Now, I think that it's going to be less volatile than previous cycles. I don't think we're going to run up to $240,000 necessarily. Could we? Yes. But the big players in this market are smarter and they know how to not run the price up on themselves. They're very good at it, as a matter of fact. They're very good at not running the price up on themselves so that they can accumulate as much as possible at as a lower price as possible from weak paper hand retailers. So in the previous cycle, we had an explosion well above the, well, what I'll call the point of control for our stock to flow model here, which is this white line, the average price that it costs to produce a Bitcoin through the mining process, from electricity to accountants to warehouses and air conditioning, all that stuff here is kind of priced into the production model of Bitcoin itself. This is what the stock to flow model represents. So as we go further into the future here, yes, this, I believe we're going to easily hit $140,000 probably by the end of 2021, somewhere close to December. And that will be the finality of the bull market, probably for a few years. There's a lot of people that talk about a super cycle. Sure, there's an argument for everything. Although if we don't have any data up for that in the past, just making that up now seems counterintuitive, because I like to base my thoughts off of data points that we have, not stipulating that the past will represent the future, but at least they will rhyme together to some degree. So when we're going through that process, I think it's ultimately more effective to take a long-term macro approach to everything you do, because the macro cycle is where you get the benefits of 1,000 or 10,000% gains, right? It's very hard to do that in the short term, and this is why most trading will always do you poorly unless you've been here for a few years. Now, if you execute a great investment thesis and you only buy for 5 or 6 years and you get accustomed to the market cycle itself, well, then maybe trading becomes something you can do for fun because you're good at it, you have the capital, and you can see where you are in the market without basically caring at all. And that's when trades are done the best, is because you can't force the market to be where you want. And if you're constantly hunting down areas of, oh my God, where can I get the next 30 to 40% gain? You're going to miss those 100x gains had you just sat in Matic, had you just sat in Fetch or Avalanche effectively. So follow that long-term thesis, I think will ultimately bode you the best. And then we'll aim at this one here too. I thought this is another great one. There's a good question here. This is the fear to greed index. And if people are like, oh, well, we're in extreme greed, should be worried? And the answer is no. Let's look at the last 3 months. The last 3 months have been spent mostly in fear, right? So if we know we have 3 months in fear, we probably have around 3 months ahead of us in greed. And this is that 60 to 90 day time frame I've been alluding to. So back here in September and October, we weren't even in a moment of fear, and the markets ran up in greed, and we hung around in greed basically between November and to the finality of the top in May. So being an extreme greed area, when you look at the long-term aspect here, it really becomes minuscule. It's a short time frame that we've been in the greed area so far. And look at the max time frame, although we don't have prior to 2018 here, which would be nice to see. We actually have spent, we are in a bull market. You can see just by the clear kind of peaks into the greed area. But again, look, just from a functional basis, anytime you see the fear index at around 12 to 20, that's probably a good area to be buying, and just ignore the price. Now, again, I think you should ignore the price in general and just always buy and always keep buying, and do that for the rest of your life, because investing is trading dollars for assets. Trading is trading assets for dollars. And trading dollars for assets macro has always paid off if you keep playing. Trading assets for dollars often has you losing. So I just want to make sure all of you are set up for what's the easiest path to success, the most result for the least amount of effort, so that you can become wealthy, build your millions of dollars, and do it while maintaining the life that you think is interesting to you, from hiking to mountain climbing to snorkeling, scuba diving, paragliding, Brazilian jiu-jitsu, whatever you think is most entertaining. You should actually be spending a lot of your time doing that, because your investment portfolio works for you. And that way you don't have to be paying attention to prices every day. Anyways, I'll go over a few thoughts. That was kind of the general thesis. Ooh, one quick and super fun, exciting thing here I wanted to go over. Lastly, here on Twitter, first, I guess, follow us on Twitter. Give us a thumbs up if you like this content. If you're new to the Arcane Bear family, maybe consider subscribing and hitting that little notification bell. But I wanted to give a shout out to Bitfoot Crypto one last time here. I am editing this video, but he purchased one of our NFT pieces called Left versus Right the other day for over $1,600. So yesterday we hand delivered that $1,600 to a local animal sanctuary called Territorios de Zaguates, which means lands of the strays. This fun photo here, there was actually over 1,500 dogs around the 320 acre kind of, I'm going to call it like a dog retreat center. So we made the contribution. We got to go hang out with all these beautiful, wonderful dogs, got to go for a 2.5 hour long walk with all of them. It was an absolute treat. So thank you for Bitfoot Crypto. We will probably do another charity art piece in the future. And just as a matter of fact, I have only sold my art pieces for charity, and I will continue to only sell my art pieces for charity. A few fun things on the list for the next 2 weeks, though. For those of you that are also interested in our heads I win, tails I only lose a little bit, check out Manga Token. Big fans of this project here, and Star Atlas. Ever since I kind of started to grasp the NFT metaverse sector a little more effectively, we've been making, or at least expressing our interest in the NFT sector. You need to follow your own intuition of what you think is best for your investment portfolio and your thesis, because you are often going to find things that I would never invest in, and you're going to get those right. So don't be scared to follow your own intuition. Whatever I'm interested in floats my boat. You should be in whatever water floats your boat. Anyways, this is Tio with the Arcane Bear. Thank you all for joining us today. I really appreciate your guys' support. Yes. You guys, I hope you all have been enjoying this fun bull market. It's been extraordinarily powerful. We're over a year into it now. Very, very exciting. Oh, there we go. There goes the camera. So that means the end of the episode. Bang.